Well, let's turn to India now, and India's one step closer to simplifying taxes for its businesses and consumers. The government's announced 4 tax rates to replace more than 17 state and federal levies. Mobin Nasir explains what else remains to be done to unify India's tax regime.
It's home to 1.3 billion people and one of the world's fastest growing economies. But doing business in India is not always easy. There are 29 states, each with its own laws and taxes. Narendra Modi came to power in 2014. Cutting red tape and improving livelihoods were his main campaign promises. This June, a bill introduced to unify sales taxes across the land was approved by the upper house. And now the government's announced 4 new taxes to replace 17 state and federal levies. Some basic necessities like food items will be exempt from tax, while others will be taxed at 5%. Luxuries like hotel rooms and so-called sin goods like cigarettes and alcohol will fall in the highest bracket, 28%. States will also charge additional rates for these goods. Most other services and goods will fall into 2 other brackets, 12% and 18%. Finance Minister Arun Jaitley wants to introduce the new taxes by the 1st of April next year. By then, he wants all states to have agreed on who collects the taxes and which states get compensated for any tax losses. He's confident he'll meet the self-imposed deadline, but he's had to make some compromises to get all states on board. And critics say these could lead to a higher number of taxes for consumers than the 4 the government's introduced. Mobin Nasir, TRT World.